Hello everyone and welcome back to another video. In today's video, I want to talk about Warren Buffett buying about 11% of HPQ. And this is actually kind of interesting because I talked about HPQ on my channel when it was selling for about $30 a share because I thought that it was looking honestly very, very cheap. So it's kind of cool to see that Warren Buffett also agrees and Berkshire Hathaway has purchased about $4 billion worth of this company. So with that being said, let's just hop right over to Stock and Lock and take a look at HPQ. And we can see that the stock is up nearly 16% on the day. And this is what happens whenever Warren Buffett buys a new company. All of these other investors just pile into the stock and it sends the stock up massively. This is also known as the Buffett effect. So let's now just dive into HPQ. And for those of you who may not know what this company is, they provide a lot of printing services and they're also a laptop and computer maker. You guys probably know about HP computers, and this is the company that makes HP laptops. Yeah, they're basically a computer maker. They compete with companies like Dell, Apple, and even Microsoft actually, and they've been around forever, and yeah, their business is, still in business and it's actually still growing. So let's actually take a look at Stock and Lock Insights here, and let's see what Stock and Lock has to say about HPQ. Now, the first thing here is that the dividends for HPQ get a perfect 5 out of 5 rating. The dividends per share have increased by 15% over the past year, and the 5-year dividend per share increase is a compounded annual growth rate of 10.5%. So over the past 5 years, they have managed to increase their dividend per share by 10% annually. That is very good. The payout ratio is also very low. The payout ratio is decreasing, and yeah, the dividends look very good. They're very healthy and they are growing. The valuation score here is a 4.0 out of 5, and this is a brand new segment that we just added to Stock and Lock yesterday, by the way, which helps us analyze and understand the valuation of any company that we're taking a look at. So we can see that the PE of HPQ is 5.9, which is well below the 5-year average of 9.3. The price to free cash flow is also well below the 5-year average, and the price to sales is basically sitting at the same. So the price to earnings ratio and the price to free cash flow of this business is selling below its 5-year averages, which is why the valuation is a 4.0 out of 5. Now, if we take a look at the profitability, the score is 3.4, and basically all of the margins are just average, so it's not like a super profitable business. Now, the growth for this company, though, is actually a 4.6 out of 5, and this is pretty interesting here. The revenue increased by about 12.5%. Net income and free cash flow are also increasing massively year over year, okay? This company over the past year has seen really strong growth, and we're going to take a little bit of a deeper look into that here in a minute. Now, the last thing that I really quickly want to point out is the financial health of this company, because the current ratio is below 1, and it does have some intangible assets on the balance sheet that make up about 20% of the balance sheet. But what is really interesting here is HPQ has lowered their shares outstanding by 15.4% over the past year, okay? So they have essentially repurchased over 15% of their shares just in the past year. They are buying back shares massively, and this is how they're really returning a lot of cash to shareholders. And for those of you who know about Warren Buffett and his investing style, what he says is the main thing that he looks at when he's looking at a new business to invest in is he tries to answer the question, how much cash can this business return to me on the price that I am paying for it? And right away, when we see that HPQ is paying a dividend and they've repurchased 15.4% of their shares over the past year, it looks like this company is returning above 15% back to their shareholders based on the price of the business, which is a very strong return on a company. And that's also why I thought that HPQ was looking cheap when it was selling for like $30 a share, because its free cash flow yield, even today, the free cash flow yield is sitting at like 16.4%. And when it was $30 a share, the free cash flow yield was near 20%. So the amount of cash that HP could return to its shareholders based on its valuation at $30 was about 20%. So when I was taking a look at the actual business or the actual asset of HPQ, I was noticing a 20% return on the company based on its price. Not looking at the share price. I don't really care about what the share price is doing, honestly. I care about what the underlying business or the underlying asset can produce for shareholders, and that's what Warren Buffett takes a look at as well. So when he was taking a look at the asset or the business of HPQ, he was seeing about a 20% return that he could get in cash flows that the business was producing. And Honestly, that's why he was buying this stock. It's just a cash flow machine. So now let's head over to the financial tab here, and let's take a look at HPQ's revenue over time. And we can see that since 2016, HPQ has actually been growing the revenue quite well. So this company is growing, as we saw in the Stock Unlock Insights as well, with almost $65 billion of revenue. That's actually insane. So next, what I want to do is actually check out the free cash flow for this business. And the free cash flow is kind of all over the place, to be honest with you guys. I mean, if you take a look at this chart right here, yeah, it's very volatile free cash flow. But in the trailing 12 months, they have produced $6.3 billion worth of free cash flow. Okay, that is a substantial amount of free cash flow. But what is interesting about HPQ that I noticed is that they are increasing their liabilities quite a bit. The company is now sitting on total liabilities of $41.2 billion, and in 2016 it was about $30.4 billion. So HPQ has increased their liabilities by about 40% over the past about 5 to 6 years, and their liabilities are in fact uptrending. Now, the assets for this business are also uptrending, but the assets are sitting at $38.9 billion. So the assets are actually below the liabilities right now, which means that HPQ actually has a negative book value and negative tangible book value. If we actually go to the tangible book value right here, we can see that it's sitting at negative $10 billion. So yeah, relative to this company's assets, they have a lot of liabilities, and it looks like there's a lot of debt on the balance sheet, and the debt is increasing. So that is something that investors should know about with this company. Now, I don't think that this is like a massive issue simply just because the company is generating so much free cash flow, and I think that they can deal with their debt and it's not really a problem. And it looks like Warren Buffett agrees. But basically what I am seeing right now is HPQ is not taking their cash flow and trying to clean up the balance sheet. What they're doing is they're taking all of their cash flow and they're actually buying back shares with it, and they're paying dividends. So let's actually go back to this company's cash flow statement right here. And if we switch to the trailing 12 months, we can see that once again, they produced that $6.3 billion in free cash flow in the past year. But check this out. Their net common stock issued is negative $6.4 billion. So you can see right here, literally they spent more money on buying back shares, basically 6.4 billion, and they only produced 6.3 billion in free cash flow. In my opinion, what it looks like is HPQ is actually taking on debt. They're increasing their liabilities to buy back shares and continue paying the dividend. And let's actually just take a look at the exact numbers here. So they paid 6,379 in share repurchases plus 959 in dividends paid, which means that they returned a total of about $7.3 billion to shareholders in dividends and stock buybacks over the past year. Now, if we subtract the free cash flow of $6.32 billion, it means that they returned an additional $1 billion to shareholders through buybacks and dividends that the company didn't produce. So where they're getting this money from, in my opinion, is most likely debt, and that is why the liabilities for the company is increasing, even though the company is very free cash flow positive. So yeah, again, if you're an investor, you just got to know that this company is actually taking out additional debt to buy back shares. And yeah, that's actually what they're doing here. But what is interesting is if we head over to Stock Unlock's freeform tool, we can see that in the trailing 12 months, HPQ has returned 19% to shareholders. This is through all of those buybacks and through the dividends paid. So the percent return to shareholders is a metric that we created here on Stock Unlock that is the dividends plus the share repurchasing divided by the market cap to get a total percent return to shareholders. And we can see that it was 19% over the past year. So again, I think that Warren Buffett was taking a look at this number right here, taking a look at how much cash this business can actually return to its shareholders. And in the past year, it's been 19%. So I think that he's taking a look at this and thinking that this is a cheap stock, it's attractive. And I think that it was attractive enough that he's overlooking the tangible book value being negative and the company increasing their liabilities to pay the dividends and repurchase stock at a faster rate. So clearly he's not too concerned about those two factors, and he thinks that this general percent return to shareholders outweighs those two negatives that I have talked about so far in the video. Now, another thing that I really quickly want to talk about when I was going through HPQ's most recent investor presentation is actually where the growth of this company is coming from. So right here in the top left, we can see that their revenue trend in the Americas is actually flat and slightly declining right now, okay? We can also see that this is the exact same story in the US. The revenue is actually declining in the US right now. But if we take a look at the Asia Pacific region, their revenue is really taking off in the Asia Pacific region. This region includes countries like China and India. And you guys know me, you guys know on my channel, I'm a big bull on India and I'm a big bull on the future of China. I think that this Asia Pacific region of the world is where the most growth is going to be coming from over the next few decades. And we can clearly see that in HPQ's numbers, their revenue growth and the overall fundamental growth of this business is directly coming from the Asia Pacific region. It is not coming from North America. It is not coming from the US. It isn't coming from South America. It is coming from Asia Pacific. It is coming from India. It is coming from China and that whole area. So this is really important and really interesting to see, because I bet that Warren Buffett is taking a look at the exact same thing right here, and he is noticing that the revenue trend in America is going down, but in Asia it is going up. And in my opinion, this is actually a good thing. Well, it's not the best thing to see. The optimal thing to see would be revenue increasing everywhere, right? But the revenue increasing from Asia Pacific tells me that there is probably going to be long-term tailwinds of revenue growth in this area of the world. Now, another thing that I found quite interesting is that HPQ is projecting free cash flow of at least 4.5 billion in the year of 2022. So that's kind of the guidance that the company gave out. And the reason that I found this kind of interesting is because, again, they produced about $6.3 billion in free cash flow in the trailing 12 months. They may actually see their free cash flow decline over the next year. And if we go back to HPQ here on Stock Unlock, we can see that the valuation is currently sitting at about 38.6 billion. So if we take 38.6 billion and we divide it by $4.5 billion in free cash flow produced over the next year, this is a price to free cash flow of 8.58. So even if the company's free cash flow drops and they produce $4.5 billion in free cash flow in 2022, I still think that this is a freaking steal for this company, okay? This is a really low price to free cash flow. And this simply just means if we go 100 divided by 8.58, it still means that the company could be returning 11.66% to their shareholders based on the valuation today in free cash flow. So this company is a free cash flow machine. The company's fundamentals are actually still growing. It is a very profitable business. They're generating, billions of dollars in free cash flow, and they're returning that cash to shareholders through buybacks and through dividends. So that's what I think Warren Buffett is taking a look at right now. I think those are all of the reasons that he's bought. I do think that there are some red flags with this business. I don't think that it's a perfect business by any means, but I think that it's going to be able to continue producing cash flow and returning cash flow to investors for the long term, especially as the Asia Pacific region and those economies in that region continue taking off over the next 10 and 20 years. So yeah, I think that this company is going to continue growing for the long term. I think it's very clear why Warren Buffett bought this business. I think that it was just cheap and returning a ton of cash to shareholders. And yeah, that is my opinion. That is my breakdown of the HPQ buy for Warren Buffett. Let me know if you guys appreciate this video. And if you did enjoy the video, please remember to leave a like on it. It really helps out my channel and I really appreciate it. And if you guys are interested in this platform right here, Stock Unlock, you can get a 7-day free trial in the description. You don't need a credit card or anything. Just enter in your email and you can play around with Stock Unlock. You can check out all of the insights on your favorite stocks, check out the valuation, all of that fun stuff. So Stock Unlock is a great platform. It is the platform that I use here on my channel. I am personally involved with building it and we have a ton of great things coming. So check it out in the link in the description. And yeah, that's going to wrap up the video, everyone. Just a nice quick one today. That's going to wrap up the video, everyone. So thank you all again so much for watching. I'm just rambling now. And I hope to see you guys again in my next video.